All right, everyone, here we are with ticker symbol AAPL, Apple Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Apple Inc. has actually broken through the 50-day moving average since yesterday. It actually tried to recover, and it has dipped and broken through support once again. And as it fell to these new lows, the bulls have tried to reappear and build some momentum here. So we're going to have to look at this real closely. We're going to narrow in and look at this very close to what's going on for Monday. And then I'm also going to talk about it a little bit broader. So if we zoom out, we can see that this is one of the lowest points reached in this bearish run. But before this bullish run, there was moments where this would level off, rise up, level off, rise up, volatility up and down, and then it continued to work its way up. And we're getting really close to one of the points where it stopped moving, and it was at 107.71 range, give or take 1 cent or 1 cent less. And from that point forward, it actually leveled off and continued to run. So if this was to break through the lowest points that we're going to look at and get closer to that 107.71 range, this could be well on its way to newer lows. So let's look at what is important for tomorrow. So as we can see, the lowest point reached was 107.74, and it created a support there and brought itself back up. Now, if it breaks through this support, like I stated, that's getting really close to that 107.71 range, it's going to pull it further away from the 50-day moving average and further away from that support level. So let's look at some of the important points here. The highest point before it dipped even more, because this is where it leveled off, and it continued to fall. So let's get here to the T, and I want to talk about our resistance levels a little bit broader. So obviously yesterday's resistance level way up here is important, but today the two most important resistance levels is the first one here when it dipped and leveled off before it continued to fall, and this slight momentum buildup, and also up here at 111.39. Keep that in mind, because if this is broken through, that would be the next one, and it's fairly close to the 50-day moving average. Now, the 50-day moving average is 111.58. I'd keep that number in mind, write it down. Super important to keep that number in mind. As long as we're below it, we're in bearish territory. The moment we're above it, we're in bullish territory. So if the bulls can break through that, they'll get back over to bullish territory, and that's their goal. The first point they need to break through to form that catalyst and start the momentum is continuing to work their way up, break through 109.96, turn that into a support, and start to reach newer highs and new resistance levels, pulling away from it, getting closer to the 50-day moving average. Super important for the bulls. If the bulls break through this resistance level and turn it into a support, it does not signify that the bulls have gained control. We are still in bearish territory. That is just an indicator for us investors to know where this is going, and if they turn it into a support, they can form a catalyst and build more momentum to work their way closer to their goal, which is getting to the 50-day moving average, to then cross it and end up in bullish territory. But this is just the beginning for the bulls to start that catalyst and momentum. So 109.96 is super important for the bulls, but it does not signify that they've gained control over the chart. We're still in bearish territory. On the other hand, the lowest point in this bearish run is 107.74. If that gets broken through, this will be well on its way to newer lows and pulling away from the 50-day moving average in a downward direction. So I want to emphasize to all investors, pay close attention to how this is reacting, because we are already in bearish territory, and if the support is broken through, we are getting deeper into bearish territory and hitting newer lows and new support levels. So this support level is super important. You'll want to know the behavior of the inflow and the outflow, who's dominating the chart. Put your 1 minute, your 5 minute, your 15-minute chart frames to see what's going on, and is there a chance for the bulls to reappear and bring this back up, or are the bears just tearing this one down fairly quickly? As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell. By clicking on the bell, you turn on all notifications to not miss a single video that I post. Share this with your friends and community, and don't forget to hit that like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.